All right, today will be shorter than usual. I mean, I got time, but I got to run somewhere in a little bit. Again, that's not a problem though. But no reason to string you guys, keep you guys occupied too long. Just a couple things to go over, and then we'll talk about whatever's on your mind. Hold on, I wanted, even though nothing major, I wanted to post the some of the top bets out there today. All right. Okay. All right. Very quickly to start, just to catch everybody, get everybody up to date where we last left off. Well, coming into the week, okay. Obviously, unless you've been living under a rock, you know, it was a real noisy week this week. You had the CPI, you had the Fed, and then you had December monthly expo, which is probably the biggest pain in the ass out of everything. You know, for what we look at and follow. Flow has been a mess. There's been a lot of rolling, a lot of protection replacement, more than anything else, a lot of protection replacement. And you know, there's no real edge out of the flow that we're seeing right now, none. So we knew that though, coming into the week, we kind of went over how it was the type of week where, you know, you shop with the eyes, as they say, right? Try not to risk too much money. It's not worth it. A good week to just follow what's going on, see how things shake out, maybe track a few names you see some action in that you have somewhat of an interest, you know, look for some tack on buying once we get through the December expiration to confirm that it's legit. All right, so it was one of those weeks. And on top of that, you know, just setup wise, we were kind of in like no man's land, right? We talked about that. Let me get these lines off. I don't know what these lines. Hold on a second. They annoy the shit out of me. Where's it coming from, this line? Okay. We were kind of in no man's land here, meaning not only based on the levels on the S&P 500 and stuff like that, but a lot of the stuff we've been looking at, and we'll look at it quickly: credit default swaps, spreads, financial conditions. Everything was at a level where usually the Fed does not, with what the current backdrop, does not want it to continue, right? They don't want spreads to tighten up even further. They don't want financial conditions to loosen. They need to keep them tight to combat inflation. So not only were we at the top of a range and at the downtrend line per se of this bear market, a lot of the more important stuff, all right, as far as financial conditions and signals, were there as well. So it was a tricky spot, right? Could there, obviously, no matter what, there's, even if you're looking at levels or whatever you're looking at, could there have been more upside? Of course, right? But more than not, we were going to see the price action that we did see, right? We had a soft CPI, the market ripped. You know, you have a better setup than the one we have. You get some continuation. Here, you got a reversal, right? You run out of gas. So the risk reward at the index level, as the market as a whole, was extremely poor, again, coming into this week. We had shorts have covered, right? Hedge funds who were short, they've covered. Specs in the futures market have covered a pretty aggressive short position. They haven't got, you know, they're not long, but no more shorts to squeeze. Again, takes a lot of the oomph behind any potential push. All right. So, yeah, bottom line, coming into this week with all the noise that we were well aware of that we had to go through, just was a week wasn't worth doing much more than just keeping your eyes open and see how things shake out. What we wanted to see shake out, and there hasn't been much change yet. But as I mentioned in, I think it was last night's little write-up, sometimes you get that delayed reaction off a Fed meeting, right? You don't see the true reaction the day of the Fed decision. Some more than not, a lot of times it comes a day or two after when it's digested. And that's kind of what we started to see today, right? Yesterday was kind of a blah day as a whole. And today, once everybody went home, pretty much digested that the Fed had no interest. I mean, cutting rates is not even in their ballpark in 2023, so they say. They want to keep rates elevated throughout 2023. They still want to raise rates, right? So a lot of that stuff, once people digested it, you're not feeling as bullish as you might have felt, coming out of coming off the press conference yesterday. All right. What we want to see more importantly than that, because again, you guys probably agree, we spoke about this. The Fed can say all it wants, right? The Fed can swear on its mother that they're not cutting rates in 2023. But if shit hits the fan, right, they're going to have to cut rates. And what usually happens in this game, you don't see shit hit the fan ahead of time, right? It usually comes all at once, and then the Fed has to react. So they can talk all they want about, cash carrying them, about not cutting rates in 2023. If next year, if the wheels come off, they're probably going to have no choice. I mean, that's what it comes down to, whether inflation, isn't at the 2% level or not. But what we wanted to take a peek at, rather than spin our wheels trying to trade this market, what we wanted to see shake out was this stuff here. Where is it? Oh. All right, remember we were looking at this. So this is what the market is pricing, right? So this is the Fed pivot. You hear everybody talking about, right? And have been talking about. They've been talking about this Fed pivot coming sooner than later, okay? And the market's been the most aggressive as far as anticipating the Fed pivot. And they're looking at, right, a top in rates and the Fed to start cutting summer of next year, okay? So you got some time there. Now, what we wanted to see coming out of this Fed decision and the commentary out of Powell was if the market starts to adjust any of this pricing. In other words, do they bring the cuts earlier in 2023, right? And the reason they would do that is they think the Fed possibly is going to significantly over tighten and the economy is going to fall apart, right? Then they would anticipate rate cuts and a legit Fed pivot earlier in the year. Or, okay, does the market just leave pricing the way it is or even push rate cuts out further because the economy continues to be resilient and, the Fed is going to need, right, the job market and the economy to really crack before they can even think about rate cuts, right? So the other scenario would be either to leave things the way they are or push this out even a bit further into 2023, or like a lot of Fed members say, into 2024. That's what they're telling us, okay? So this is kind of what a lot of the pundits and the Fed, this is how they're pricing a Fed pivot. Where'd it go? Oh. Okay, so this is TD and their forecast, right? So you see here 2023, okay? They have the Fed hiking rates all the way to May 2020 next year, okay? June, where the market's starting to price in cuts, they have the Fed holding rates, continuing to hold rates, and to start cutting in the fourth quarter of 2023. Okay, so you see the difference between what the market has priced and what a lot of the Fed lingo and analysts and a lot of the commentary out there is looking for, right? And that's the difference. That's the tug of war in the market right now. That's the tug of war. Does the economy worsen and get the Fed to flip and pivot and start cutting rates earlier? Or does the economy remain resilient like it has and, prolong the agony in a sense, right? So that's what we wanted to see, if there are any changes to any of this. And the reason being is if we don't see any changes, okay, and let me give you the two scenarios, right? If we don't see any changes as far as what the market is pricing, and it's all what the market could be wrong, but what the market is pricing is going to determine the price action we're seeing, okay? So if the market starts to price rate cuts for earlier in 2023, what we're likely to see is the economy, what it's telling us is the economy is going to start to worsen, okay? And more than likely, it's going to have an effect on the price action as well. All right, the old bad news means bad news scenario. Okay, so that's one scenario, and it would kind of put everything on fast forward, right? Which a lot of you guys want in a sense, right? Get to where we want to get to quicker, but more than not, that means there's going to be some pain. Okay. The other scenario is we get a continuation of what we're seeing until there are some signs that the economy is starting to roll over significantly, or the Fed's going to pull off a soft landing. And with those two scenarios, I think we see more of the same even in the price action. And what I mean by that is I think we see kind of this choppy, range-bound, bullish bias out there, right? Where the indexes are extremely difficult to trade and make money, right? It's only going to be at extremes where you can catch some nice moves. The crowded names that everyone's looking at will continue to be a debacle, okay, as they have been, right? But under the hood, in select pockets, and that will probably change from time to time, and in individual names, there's going to be significant alpha and outperformance that we could take advantage of, right? And the reason for that is we're kind of, again, I keep saying it to myself because I got to come up with another term. It's not a sweet spot. There's nothing sweet about it, but kind of in a dull spot, right? Where the market is pricing deterioration next summer, but we're in December, right? So you got December, January, February, March, April, where with all the money on the sidelines and as positioning as cautious and as bearish as it's been, it's probably worth looking at, at the least some of even the more defensive areas of the market where earnings are holding up, right? As the economy holds up, and look to take advantage when these groups see some selling. And then that's what's been going on. Right? Now, the problem we have faced, and this is what we were talking about this week, a lot of those areas, right? A lot of the good stuff out there where we want to play in, right? We don't want to fool around in Tesla. We don't want to play with Apple. Those things are toast. Okay, whether you want to admit it or not, they're toast. Okay, those are tough trades. It's tough to make money in those things. Right? Well, the easier money, I should say, has been in a lot of the defensive names and the names, groups that we've been talking about for a few weeks or months now, actually. Okay, and the main issue that we faced coming into this week is look at the moves. Right? Look at the rallies in these things off that low, that recent low. I mean, it got crazy. It got crazy. So, and I give you a perfect example. Here's a name, right? That is definitely the type of name we want to look for flow in and look for trades in, okay? But, look at like yesterday, right? It caught some, or the day before, it caught some action. Not only are you have to buy it into an upside niner, right? And if you guys don't know what a niner, exhaustion signal, right? Just has come too much too quick, but it's the second straight niner, like we're still in a bear market, right? We're not in the go-go days of Polyapatia and Kathy Wood SPAC euphoria. You don't want to chase moves like this, right? So that's kind of the issue. The big issue we face coming into this week is a lot of the good areas, the good spots of the market have already moved, right? And I mean, the market as a whole has had a nice, but has had a decent bear market rally off the lows, right? So we needed what we're seeing right now. We need this. We desperately needed this, because this is going to set up the next round of tactical opportunities on the long side. And the good thing is, this week was going to be a tough week anyhow to get an edge out of the flow and make sense out of the flow, no matter how good an order or size order we see, right? We got to look at open interest. Is there December position that's expiring this week? Are they replacing it? It's just a menagerie. It's a mess. So this week was the perfect week to digest some of this move, right? Just sit back, track some names that you want to watch going into next week. And then, we got now a little bit of a breather where things reset, and the next round of tactical opportunities will probably surface, right? And that's what's going to happen. Either the two scenarios I was mentioning earlier, okay? If the market, and it's certainly a possibility, I guess is the best way to put it. But if the market has determined that the Fed's over tightening based off what they heard yesterday, okay, then the likelihood is we're going to see high correlation across the board, and you're going to see a correction in everything, even the good stuff out there, right? Like we're seeing it in energy and stuff like that. But that's not a bad thing, right? You got to kind of sidestep it. But once it runs its course, right? And once the selling gets to an extreme to where we're going to start to see individual names bottom first and hold up better. And then we see some buying come in. That's where the opportunity is going to be. That's where to be the opportunity, right? So again, I guess the point I'm trying to get at is this was a good week to do nothing, right? Again, at most, maybe track a few names that caught some action. You want to see some action next week and on to confirm. And beyond that, I think next week, as the flow clears up, it's going to become a clearer picture to us, because we could certainly, you can see, right there, we've had these doubts of the Santa rally, whatever, Christmas rally, right? That's a good thing. Remember we talked about that? Like throughout this rally, there's been that suspense, right? There'd be a 2-day sell-off and people think it's over. And then all of a sudden some buying comes in, finds a few names. So that could continue, undoubtedly, that could continue into early next year. And then it's going to be earnings season, and that kind of is going to take control. You know what I mean? And that's where a lot of people are nervous about earnings, first quarter earnings. Do they hold up okay and outperform? Again, that'll be a catalyst for a rally, an unexpected rally, because a lot of people are expecting weakness in the first quarter next year, right? But if earnings really start to fall apart, you could definitely see some selling at the index level, and these tech names, the mega cap names that haven't really caught the beating they deserve yet. All right. So that's where we're at. And I just, I want to make it as clear as possible. And we talked about this, we spent some time on it, but I know some people weren't around for the webinar. I think we're at a point now, okay, where it's going to be really difficult to trade the indexes. It's going to be extremely difficult to trade the big names, right? The well-known names, the crowded names, okay? The opportunities are going to be in individual names that are less crowded. Okay, doesn't mean less liquid, less crowded, right? Merck is not a small cap that doesn't trade. Okay, it's just been a name that players really didn't have an interest in because there was easier money to be made elsewhere, right? When growth was on fire, and now we are already in that regime change, right? Where all the crowded stuff is going to sit there dead, spin their wheels, frustrate people, beat people up, right? Until the point where they spit it all up and we got a decent way to go before we get there, right? But more importantly, there's a whole market full of companies and names that have been neglected and ignored for decades. And there's a lot of money on the sidelines that's going to start to look for these areas. And I think that's where we're at right now. That's where we're at. Okay. And it's a slow process. It comes and goes at times. I think that is what makes it really difficult to believe at times. In other words, we're going to get like days like today, we're going to get weeks like that where, again, everything's highly correlated to the indexes. So the market is going to come in, it's going to sell off. You're going to see everything sell off. But what you're going to start to notice, then there are going to be different names that bottom first and hold up better. You understand? And start to see action than what we're used to seeing. The Teslas, the Apples, the Microsofts, right? Or AMDs. They're not the ones that are going to be seeing the clean action as the market sells. So I think that's where we're at. That's where we're at. And the good thing is when we see that correlation like we're seeing now, right, where the indexes are down and everything is down with it, the good thing about that is that's the setup for the next batch, like I was telling you, the next batch of tactical opportunities, the new batch to arise. Like that's where it comes from, right? So all the, like for example, all the names we've been looking at, right? It was off that correlation when the whole market was selling and those names were breathing as well. That's where they started to surface and heat up. So it's kind of almost like a mini reset every so often. And that's normal market behavior without QE. Like for those of you who have been around the market, you know exactly what I'm talking about. Like when there's not QE involved in the market, when the market's not rigged, okay, it would be normal that you would get a correction every 2-3 months. Normal. The leaders, right, the outperformers would uptrend rally for a quarter, 3.5 months, right? They just wouldn't keep going and going and going. Then they would correct, base out, and the leaders set up and went to new highs again. That's how normal, healthy, bullish price action trades, right? In the QE world, there is no reset, there is no correction, right? They just keep going and gamma chasing the whole 9 yards. So it's normal behavior that's happening under the hood, normal bullish price action. And these corrections are just a part of it. But again, the most important thing, that's where the opportunities are going to come from. That's where we want to look, is off those corrections. All right. So that's where we're at. Unfortunately, I know, listen, everybody wants to predict what the market's going to do. Everybody, you look on like social media, who's calling for new lows, who's talking the market has bottomed, who's calling the next up or down move tomorrow. I mean, we got to be honest with ourselves, right? In bull markets, those calls aren't easy. And in this market right now, they're impossible. They're impossible. They're impossible, right? And that's the good thing that's been different for us, is that we don't have to rely on forecasting what the overall market's going to do to try to make some money anymore. You understand? You don't need the market to go up and rally for 3 straight days for that name you're looking at to make money. And I think that's the difference. And that's what is going to make it a little bit, I hate to use the word easy, but easier than what we've gone through. Easier than what we've gone through. All right, but the one thing we want to try to avoid is chasing, and not only chasing, but getting stuck chasing, right? In other words, you don't want to, you don't want to chase a deer or a merc after you missed it already, and then you buy it up here and you sit in it and get caught in a whoosh. No, we're in a bear market. You miss something, you wait, let something new come to you. Otherwise, wait for that breather. It should come. Again, this is not a QE market, so it should come. Yeah, exactly. And if you look at, like, we were talking with Sil on the last webinar, right? Like this name, okay? The money, fine, you held it, you made some money, but the money is not made holding it. The money's been made trading this thing, right? You don't want to buy it here. You wait for something like that, right? You don't want to buy it here. You want to wait for something like that. So instead of trading like an Amazon or a Tesla, and that's where you usually buy the dips, right? That's where everybody has been trained to buy the dips. It's this stuff that is seeing that type of action. And there's going to be more of it. You know what I mean? They're going to be, again, it started out with energy, spread out to a few commodity names. Then, they've gone into consolidation, then pharma, some healthcare stuff, right? As time goes on, we're going to see more and more of the names and subsectors involved. We should see anyway. We should see. Yeah. And you're 100% right, Sahil, because the thing is we got to keep reminding ourselves, not that we can forget, but we're in a bear market. Okay? This is not a bull market. This is a bear market. You want to trade in a bear market. You know what I mean? So like you're saying, Phil, you want to find a decent entry, right? You make your money, you get out. This is not, we're not looking for new leaders yet, right? We're not looking for new leaders in defensive areas. Like, this is the roadmap for a bear market until we get to where we want to get to. Yeah, and that's the thing. So, I tell myself that all the time. In a bear market, right? I always remember saying this. It's notoriously known for being early on the buy side and being early on the sell side. Always. Always. That's what a bear market does to you. The thing is if you get to a point where we are now, where there's a divergence in names out there, you don't have to pinpoint those entries to make money. Okay. Like, for example, again, using a BTU, for example, if you buy BTU here and you're early, okay, you still could get bailed out. Where the growth names, the hockey sticks, all that stuff that we look at, you're not going to get bailed out anymore. You know what I mean? That's the difference. So we don't have to, on the sell side, you're always going to sell early. That's a whole different story. And I see Tree talking about a couple names that, without a doubt, wherever you sold them, you probably regret it, right? Wish I held AEHR and Flex. I mean, the Flex, honestly, like we talked about it, the Flex, even with all the flow was catching and it looked good, I still found it hard to believe that this thing was going to break out being a tech name. You know what I mean? In this environment, like was going to break out from this massive consolidation here. So I'm with you. Like, I didn't even think it was possible. Yeah, I know. It's a tough hold. Like I said, when it was here, I didn't. And that's what, 7 points ago on the $17 stock. That's a huge move. It doesn't even feel like it, but 7 points on a $16, $17 piece of paper, that's a big move. That's a big move. So what else? Let's see here what I wanted to show you guys before we start talking some names. All right, so here's again for those of you who are interested in the market, because listen, you have a certain style. I'm not telling you to change, right? You just, if you play the indexes, you want to wait for better spots. You have to wait for better spots. All right. Again, what was tough about coming into this week, we are here, right? And this is, remember, where the Fed and the boys threw a tantrum at Jackson Hole about the rally in equities and risk assets. All right. These are credit default swaps. All right. So we're here again. So, if the Fed wants to keep financial conditions tighter, they can't allow this to roll over from here. They just can't. All right. So you're kind of, and we already talked about, the correlation between this and the market. It's a mirror image. So if this is kind of going to act like a floor, hence a ceiling, right? What kind of lines do I draw here, boy? A floor or a ceiling, the risk reward from here is dog shit. Excuse my French. What if you're looking to play the indexes, especially not even overnight, but for no matter how you're trading the indexes, you want to be able to, there be some movement in it if you're going to get long at all. You want to do that when these things are first topping out over here. And that's where you're going to have sentiment too on your side and all that. But this is just a tough spot. Right? It's got nothing to do with the indexes on the S&P 500, but actually has everything to do with it. So just tough spot. Here's the positioning front. You got hedge funds who were short, right? That was into the lows. And, they pretty much have covered here, right? We looked at this already. This is nothing new. So for a better spot entry-wise at the index level, you want some shorts to get caught again. You want some shorts to get caught again. It's just, it's a tricky spot because, like we were saying, for this market to roll over and break new lows, you really need the wheels to come off, I think, based off how players are positioned. They're not short, but they're not long. So you need the economy to really start to deteriorate. It's possible. It's certainly possible. But that's what you would need for, this market to have some oomph on the downside. But the odds probably are for a more, a choppy menagerie. And that can mean anything on a day-to-day basis, right? Like, look at this, right? Fake breakout, selling today. Let's see, we go down tomorrow, we probably end up closing green. Like, that's the type of price action you're gonna have there. But for a breakout, you're not gonna get it. You're not gonna get it. Not gonna happen. Not with the information we have in front of us. That's why you got like Hartnett of Bova saying you got to sell 4,100. It's just not worth it, right? More note earlier to expect up to 30 million CTA selling SPX close. Yeah. So because if you remember, T, they covered a lot of those shorts on the way up. So as the market comes down and the VIX starts to go up, they add shorts back on. You know, so that's the risk. Running away, but where are we going to go? See here, like where are we going to go? 4,300? Like where are we going to go? What do you mean running away? Where? Where do you think we're going? Oh, you're saying we're not going to go. Oh, I thought you were saying the opposite. You know, I just honestly, I wish I can be a contrarian and have that feeling, that outlook. It's just, you know, with the Fed rigging in the game, you know, needing to do what it's doing right now, it just really, you know, it limits that upside. You can't be a contrarian in this type of market on the upside. It's impossible. But we'll get there. We'll get there. You know what I mean? We'll get there. Yeah, we concentrate on what we have in front of us. I think this next phase is, like we were saying, try to, you know, not ignore the indexes and the crowded names, but just push them aside and look elsewhere first. Because that's where the easier money is going to be. Yeah, it's going to be choppy. It's going to be choppy. It's just going to be so hard to trade. You know, so hard to trade. What else did I want to talk about quickly? Here are some of the names like caught some action today. I threw them out there again just for watch list purposes only. And just so quickly, I'll tell you why. Every single one of these names on here, if you pull up the open interest, they had a December position, at least one in open interest. So it could be just, again, not new buying, just replacing, right? The end of the year, December's expire. They want to put some of that exposure back on. So if you like any of these names, what you would want is to see tack on buying, repeat buying come in Monday on, once we get out of December. All right. And then, you know, that would confirm that at least there's some accumulation going on there. But otherwise, these were decent looking orders. You know, if we weren't in the December Expo, you know, these would be decent orders. Some time behind them. There's BCE, June 45s. You guys know this tech name, ADSK. This is some longer term stuff. MAXR, Feb 25s. You know, for a market that there wasn't much call buying out there today. You know, these orders are pretty decent. This name I was kind of looking at, but they had some December. What is this name? I wanted to ask you guys that. Anybody know that? LNTH? So maybe you guys might know that name. But I looked at open interest and there was some December exposure. This is a medical company, right? Anybody familiar with them? Nobody heard of these guys? Well, I'm going to watch it. What is it? Canada, Puerto Rico, third-party distribution. Let's see. What's it saying here? Engages diagnostic imaging, nuclear medicine products. Yeah. You know, it had this big, massive move. You got, you know, correction here, which would be normal after a move like that. Profitable company. And it shows up on IBD screens. Interesting. Yeah, because they got legit growth, you know? So something to keep an eye on if we see some more action coming in. This is the prototype, right? This is the exact prototype. Profitable name, medical, right? Which is recession proof, medical supplies, whatever they do. This LNTH. So definitely worth keeping an eye on. Yeah, good, definitely good numbers. Look, you know, they're profitable, legit. All right, so we'll see. We'll see if it catches any additional action. But other than this, today was all put action, rolling so much. It's the end of the year, right? So players' funds, they got to replace expiring protection. So much garbage out there. It was a mess. 500 convertible holdings. Is that what the weakness is recently? Maybe from, it looks like an offering, possibly? Because the earnings look decent. Maybe they're raising money, which, was a smart thing to do while the stock is up. Well, we'll see. We'll see if it catches any more action. Anybody have any questions? You got anybody have any questions or something they may want to see that I haven't spoken about, or where things stand, or market, or anything? I did not. I breezed through the flurry note. I didn't get a chance to read it. I know he's bearish. He's a bear. He's always a bear. He's the yeah, I guess you could call him a perma bear. He's the bear at Goldman. But it's good, you know what I mean? Because you got quite a few bulls at Goldman. So he's the reality check version of him. But what was your takeaway? Anything what was the main takeaway for you? Anything bunker, really? He was that negative? Reason? Any particular reason? Was it one reason, or I know the note was a few pages. Bunker. That's hysterical. That's hysterical. Was he talking about outflows? Is that one of the reasons? Let me see. I have it here. Oh, did I don't know if I liked it, but let me see. Nah, I forgot to like it. Oh, this came out this week. All right. And this is Hartnett. He's going to come out with the Flow Show tonight too. We'll see what he has to say. But this is why I think, guys, you get this, what we talked about. Again, there's no one word to explain the market price action that we're talking about. But kind of what? Chop, range, / bullish bias. Yeah, you know what it is, T? Some people don't like that about him. I like that about him. What he does is he adjusts along the way. You understand? What drives me nuts, what I don't like about a lot of the analysts out there, or just anybody in general, when they build a bias and get hung up on a call, even when they need to adjust it, they won't, out of almost like pride, right? Because they don't want to admit they're wrong, and they kind of just keep pounding the table. I don't want to mention any names, but you all know a certain bull who loves to do that. Probably the biggest perma bull on the street. But that's his, that's his stick. That's what he does. So instead of adjusting, he just pounds the table even more and hopes to get bailed out. You got to be realistic in this game. Okay, it's forecasting, it's one of the more difficult things to do in life. The only thing you can do is adjust along the way, right? If you're right, that's one thing. But when you see things start to turn in either direction, you have to adjust. You have to be realistic. So I think Hartnett, that's why he has the respect of the street. He's known to do that, not flip flop, but when he needs to make adjustments, he makes adjustments. So, I mean, he hasn't had a huge adjustment. I think, again, with the market, the way the market was pricing things, and I think a lot of us felt that way too. He thought a lot of pain was going to come at the end of the year. where we're at now, economically. Okay. It hasn't, to the surprise of many. Okay. So a lot of that got pushed into next year. You know what I mean? So now, with that being said, okay, we have where a market has found a low. Okay. We've had a little bear market rally here. We've had resilience in the economy, and players still aren't getting long. You understand? So that's Harnett, what Harnett's trying to say here, that he thinks the worst is still yet to come. And he thought it would show up early, first quarter next year. But based on this, what he continues to see here, the pain trade is still to the upside. So again, it doesn't, he's not meaning the upside new highs, but more of what we're seeing here, more of players giving up on new lows coming. You know what I mean? So Hartnett's kind of confirming our thesis, in a sense, right? That the low should hold. You get this bullish bias that continues possibly into early next year, right? And then people start to give up on new lows, right? They start to get more bullish. That just hasn't happened. The cash levels are still high, you see it all here. We get a tactical rally off this pullback. Yeah, that's why I'm interested to see what he says today, tonight, the flow show. But he's probably going to elaborate a little bit on it. You know what I mean? He's probably going to elaborate a little bit on it. And yeah, good call, Sahil. I think that's what he's going to expand about. I think he's going to talk about what should do well. You understand? In this pain trade higher. All right? Yes, definitely. Definitely. Tonight, definitely. I'll give you my take, just to, again, clear things up. Because I agree with you, and we follow a lot, we follow a lot of these different things, so it could get confusing. But luckily, I think what's made it a little bit easier, he's been on our page a little bit. He's been in agreement kind of to how we were seeing things. So I guess that makes it easier, If he was seeing something completely different, it probably wouldn't be as clear. Praveen, you don't see the questions? Wait a second. Why? Attendees can chat with everyone. No, I'm reading them all from here. I'm reading them all from on here. Oh, I thought, because I see you guys talking with yourselves. That's why I thought host and panelist. Hold on. How about now? No, but I put, that's for me, everyone. Wow, I didn't know that. I'm glad you mentioned that. Everyone. The chat can say chat to host or everyone. Yeah, I got everyone on here. Yeah, maybe you got to do something on your end. I don't know. You're asking the wrong one, guys. We can all see. Oh, your end. Okay, good. All right. So yeah, that's Harnett is saying how the pain trade's higher because for good reason, people just aren't bullish. Like here's the contrarian trade, and you guys probably don't need Harnett, me, or anybody else to tell you it. You hear it every day, right? The consensus trade, what everybody feels right now, is the Mike Wilson trade, right? Well, they are, but how we get there is different, okay? Mike Wilson is the consensus trade right now. Mike Wilson is saying we have a rally like we did, and then we sell off into January through earnings season. Okay, right. So first quarter of next year, which is a couple weeks away, right, should be bearish going in, should be bearish to start. Okay. So that's the consensus right now. And what a lot of people are thinking is that the first early next year is bearish, and then you're going to have an opportunity to get long in the second half, right? So if you want to be a contrarian, okay, and this is a legit contrarian play right now because almost everybody's on that, from reputable people to jabronis. You got everybody on that trade. The contrarian play would be things hold together early next year and then fall apart into the summer. Okay? Make sense? You understand what I'm saying now? Like this. Okay? This is your contrarian. Oh, don't tell me that, Sahil. Don't tell me that. This is your contrarian play. Hold up. This is your roadmap. Okay, what the market is pricing. Okay, the market's telling us that till May, the economy is going to be resilient and the Fed's going to be able to hike some more if they want. But come summertime and into the end of the year, get ready because the wheels are going to come off. That's what the market is pricing right now. And that's believe it or not, that's a contrarian play. You know, that's a contrarian play. And the Fed, right, and the Fed's singing a completely different tune. The Fed is saying, no, we're not cutting rates. We're going to raise rates all the way into 2024. The economy is a beast. Yeah, and you know, T, that you're going to see people shift no matter, you know. And like I said, I know you don't want to hear it, and now I'm not bad mouthing you, that by no means, but I'm saying you rather not be like that. But it has to, if you want, you know, you want legit research from these guys, you need that. You need it, T. Like I give an example, T. Okay, the smartest. The sharpest forecaster in this game is the market itself, right? The market itself, the price action itself. You have a lot of people, they make me sick to my stomach every day. Price is truth, right? Price, pay, whatever bullshit license plate logo they go by, okay? The market is the best forecasting mechanism and tool in the world, okay? Even the market has to change because it gets it wrong. And I'll give you an example, okay? We talked about this Sunday. The market initially, okay, was calling for this in February, okay? So it was calling for the economy to start rolling over and falling apart in February 2023. Hence, the Fed would start cutting rates here. Okay. And that was Hartnett. That was Hartnett's call. Okay. Because if the Fed was going to start cutting rates in February, all right, the couple months prior to February, you would start to see deterioration in the economy. And that's what Hartnett was calling for. So what happened? Inflation hung around and actually had one more push higher, remember? And the market had to price that in, and that's when the Fed went bonkers with these rate hikes. So the market had to make the adjustment and take rate hikes from rate cuts from here and put them out into the summer. So you see, even the market had to make an adjustment. I mean, this is, you know what you're talking about here, trying to predict this stuff like in one shot. Yeah, that's what I'm saying. You got people on social media, they live in fantasy land. The ones that pound their chest. I told you, like they can predict this shit flawlessly. You know what I mean? You gotta laugh. You gotta laugh in their face. You're dealing with, forget it. What kind of animal you dealing with here? You gotta predict. Nobody has a clue. I shouldn't say nobody has a clue. But guys, people like us, we don't have an effing clue. You see, the sharpest people in the world are having trouble trying to get this thing right. No, so here you'll never hear it. Of course, it's just the way the game, is structured. Like people, it's a turnoff for those jabronis who run to the hot out of the month to hear I don't know. If they hear I don't know from somebody, they think, they look for that magician with the crystal ball. They look for Houdini. They keep searching for Houdini. Yeah. But it's not even the forecaster and his ego. It's the people who follow. They want that dream of somebody who can be undefeated and flawless. But it doesn't exist. It doesn't exist. Again, just go listen to any Drunken Miller interview and you'll hear right from the horse's mouth. The most modest, probably he's it when it comes to, right? He's as close as they come. And he'll tell you that there's no such thing as that you have to admit when you're wrong and make changes along the way. That's what makes you good in this game. Not being right. He is so humble. That's what you gotta love about him, no? So humble. Like almost, like not even humble, right? Beyond humble. Like he's the total opposite of it. Like he wants no recognition. He almost like, right? You give him a compliment, it makes him uncomfortable, right? You see, he gets uncomfortable. Oh, he's sharp. He's sharp. Because he wants, he wants everybody to know, like, this game is a tough game. You make mistakes, it's part of the game. You have to make mistakes. No, Drunken Miller. Maybe he's definitely superstitious, T. He's definitely superstitious. He's admitted to that too. He's so superstitious. Oh, I'm so superstitious. I overdo it. I'm there. Because I believe in the market gods. That's why and sometimes they like to come after me. Oh man, as soon as I get excited, God forbid, get a little cocky, they'll give me such a beating. Yeah. If you're in the game long enough to hear, you see it all. You know what I mean? And it makes you humble. Whether you like it or not, it's going to make you, it's going to make you humble. See through the bullshit. Exactly. And unfortunately, that's a, it's a part of it that people have to go through. Right? You're hearing about it now. Like I haven't really paid attention to it, but I know there's been like a crackdown on pump and dumps or something that's been going on Twitter with some of these touts, and they knowingly they're involved in a pump and dump, right? Yeah, like I'm sure these are the guys we're talking about, right? They pound their chest, they're showing off all their material things that they're robbing people with. They're robbing the people's money and they're showing off what they're buying with it, which always I found incredible. I always found that remarkable. Like people love to see what these bozos were buying with the money they're robbing from people. It's amazing. Yes, karma. It's a bitch. And probably that's another thing. It doesn't last in this game. You understand? It could be you go on a nice ride, you make some nice money, you live an incredible life for a few months, but it always bites you in the ass. It always bites you in the ass. Oh, I thought we know them all. I thought I read on Bloomberg it was some lady who was no, that ratted them out. But anyway, guys, guys, this is every market cycle. This is later, Raj. Have a good night. This is every market cycle. You know what I mean? Every market cycle. So getting back to the market here. Yeah, again, we're dealt. Listen, we gotta the hand gets dealt to us. We have no choice, right? We got to deal with it. I think we take a day by day approach, right? We don't. The one thing we don't want to see, right? What would change everything we talked about the last few weeks is if you start to see the cautionary signs start to light up, right? So you see credit spreads start to rip, meaning widening out, right? You see financial conditions really start to aggressively tighten. If we start to see that, no matter what, I'm not saying the stock picking aspect of things is over. I think it's just we have to step to the sideline. You don't want to get in the middle of that. You understand? You want it to run its course, and then we could start looking again when they calm down. What does the Fed need to see to back off on these rate hikes? See, yeah, I don't think the rate hikes, I could be wrong, but it's not even a concern for me. I don't think the rate hikes are the problem. I think what's going to be the problem, okay, is that the Fed is going to stop hiking rates. I think the rate hikes aspect of it's already factored in. I think the problem is going to be the Fed is going to stop hiking rates, but they're going to keep them where they're at, and the economy is really going to start to deteriorate. You understand? All these rate hikes and tightening are going to start to play their toll on the economy. Are going to start to have an impact, like we've been saying. So you're going to have an economy that really starts to deteriorate and elevated rates. You understand? Normally, the Fed would start cutting into that. And remember, we looked at the numbers, right, Praveen? We looked at them together, you and I, a couple of weeks. The market many times will still go lower as the Fed cuts rates. So you get selling in the equity markets and risk assets, screaming for rate cuts. And even as the Fed cuts rates, they continue to sell because the economy is so bad. You understand? But then eventually that puts in a bottom and starts the new bull market, because what happens is you can end up getting that capitulation because of the economy being so bad. This go around, so my point being, this go around, the issue is not when the Fed is going to stop hiking rates. What is it going to take for them to cut rates? And what I think people are nervous about, because of inflation, the inflation factor, it's going to take more than usual, right? More damage than they usually need to see before they start cutting rates. That I think is the tricky thing here. We will know by June. We will know by June, exactly. Right. So that's a good point, though, Mark. That's why it's worth paying attention to this stuff, right? Because the market is going to figure it out a lot earlier than we are. Okay. So Mark's 100% right. The market is going to know before we pick up on it. Okay. Especially when the economy starts to deteriorate, we're going to be so distracted, the market's going to pick up on it a lot earlier than we are. So you're going to see it get priced in here. You're going to see it get priced in here. And, the market might pull these up, right? If the economy starts to worsen. But that's what gets the Fed to cut rates. That's what I couldn't understand what people, because they've never been in a bear market before. What gets the Fed to cut rates is the deterioration in the economy and in risk assets. So what you have is you have the markets selling off credit spreads blowing out, screaming at the Fed, you're too tight. You have to cut rates here. You're too tight. That's what that weakness is basically screaming. So you remember like late 2018, Praveen, that we were talking about, right? During the holidays, it was screaming at the Fed. You can't have QT on autopilot. It's too tight, right? And the market went down literally every day. Felt like it would never bottom until it got the Fed to pivot. So that's what gets the Fed to react. The market controls the Fed. You know what I mean? Like think about what just went on. What happened with the Fed raising rates? The market forced them to raise rates. No, they had to play catch up. Right? They had to play catch up this whole time. That's how they had to raise these 75 bips. They were so behind the curve. Yeah, the market gets the Fed to do what they need and want it to do. So, that's why it pays to pay attention to this, I'll give us an idea. But, Ani had a great point Sunday night. Like, even knowing this, okay, even knowing when this is going to happen in regards to equities, it's still not a lot to know how equities are going to play out over it. You know what I mean? When does the market start factoring in these rate cuts, right? Does it happen in May? Does it happen in April? Does it happen in March, right? Does it continue to sell as the Fed cuts rates? This is all stuff that there's no way to predict right now. It's way too early, way too early. T, I don't think so. I don't think so. Listen, I think inflation could definitely be stubborn. You know what I mean? It could definitely be stubborn, right? Getting back to that 2%. But I think the Fed will get rid of that 2% anyway if it has to. I think it's all about the economy starting to deteriorate. I think that's what it all comes down to, right? Unless you really believe the Fed is going to pull off some miraculous soft landing, which is a possibility, but the odds are small. The odds are small. But when the economy really starts to deteriorate, when the job market starts to crack, right? That's when you're going to start to get more answers to a lot of the stuff, we're talking about and asking. And the reason why we shouldn't focus on it anyway, okay? Because, and again, going back to Ani's point Sunday, okay, how do we know that the equities don't continue to sell as they cut in rates? They usually do in bear markets, okay? But you know what will prevent that? If we get capitulation. You understand? So if you get fund flow capitulation here, you could get that bottom here. But if you don't have fund flow capitulation here, you're likely going to keep selling, right? So how do you predict that stuff? Right? How do you predict that stuff? It's impossible. Now, if I could show you, Mark, I think it was you that I was asking. It went back to, I think, 2000, and I had a good chart with the fund flows, and I can't find it again. You believe this? Wait. Oh, here. No, that's not it. But I think this is it. Hold on. Look at this. Look at this. Look at this Twitter search. What a menagerie. Watch, I go to latest, nothing comes up. Can you believe this? Oh, look. When I go to latest, nothing of my posts come up. How does that make any sense? Hold on, maybe. No, this is global fund flows. Damn it. I don't want global fund flows. Look at this. Tech. And look at energy. Telecom. Yeah, not to get off topic here, I wanted to find that flum flow. I can never find it with you guys. No matter what I do, I can never find it. I searched it on my own, it came up. Now today it doesn't come up. But this is kind of similar. Oh, yeah, this is similar. All right, here. This is good. Okay. So you see fund flows here from 2016? Light blue. Well, either or, they look the same. But the light blue line, the turquoise line here, or whatever it is. Okay. You know what this means? Oh, look how good I got with this pen. Do you see this? Do you see? It's like I'm writing with the. That's pretty impressive. All right, that's what that means. You see fund flows? Here's the zero line. 2016, 2017, 18, 19, 20, and then 21. Every correction, and it's a correction, these pullbacks, anytime you get a market pullback, you buy the dip. You get a market pullback in 2016, buy the dip. 2017, buy the dip. 2018, buy the dip. 2019, buy the dip. Meaning, buy the dip that you're going to get a V-shaped recovery to new highs. The bull market is not over. You understand? Okay. When can't you do that? When this happens. Okay. Now you get a market correction. You get that all off here. See this? You can't buy the dip. You don't get that V shape. You don't get the continuation of the bull market. You don't get the continuation of the bull market. So now you need this to happen, and then this to reoccur, and then that's when we're going to have our new bull market again. We climb the wall of worry. All right. So that's the point in regards to the Fed. The Fed could, let's say, start cutting rates in February. That doesn't mean that the equity market's going to bottom. No way does that mean that. You know what I mean? If this is up here, right? If that's still up there, okay, that means no new bull market. And that's the most important thing in regards to a bottom, right? Right. That's the only reason we want to try to find the bottom, is because it would be the start of a new bull market. Yeah, but the thing is, Matt, the thing is about these bear markets is that even when you're bearish, it's just as difficult to make money. It's just as difficult. So it's easier said than done, right? If you want to play both sides, right, what you're trying to do, okay, is basically find a long, right, or play the long side into this, okay, and then you want to play the downside into that, okay. And again, you're never gonna time the tops and the bottoms. So it's kind of the in-betweens that you're looking to play when you're playing both sides. So there's less meat on the bone, right? Now, what happens if you get what we're talking about? We may get, right? We're in that lull period, and you get this. What do? How the F do you trade both sides of that? Now, if you're going to tell me you're going to get long here and short there and get long here and get short there and get long here, yeah. Okie dokie. Sure you are. You know what I mean? See? All right. You think you're Houdini. So that's the problem. right? That's the problem. Okay, the start of the bear market here, again, I'm not using the word easy, but it's easier for bears because they can sell the rips. You know what I mean? Sell the bear markets and they'll get bailed out. But as the bear market goes on, you get these sideways ranges for a while, like kind of like we have here, right? And there could be a lot of in between now. Yeah. If you listen, if you know without a doubt, Saeed, without a doubt, that's where the money's been of late. If you know what you're doing and you know how to manage your risk, without a doubt, that's where the money's been, selling premium. The problem is a lot of people don't know how to manage their risk, right? They think that you just sell naked and you get paid until that range breaks and you're dead and you get wiped out, right? So, yeah, listen, you gotta have discipline. You gotta know what you're doing. It takes time. You gotta learn, like take a Ranchero course, Lucci, talk to those guys and make sure you brush up before you put some real money to work, because you need to know your risk when you do that. I've seen so many people blow up, so many, because you think it's easy money. You think that nothing lasts forever in this game, guys. Nothing, especially anything good. It doesn't last forever. Yeah, remember? You go through phases in this market. There's time where it's risk on. You can play, calls and puts or whatever, and you can make some money. And there are times where, you either go into cash or you need to sell premium, like you're saying. You gotta, again, going into a cash position, the more conservative approach, but you're not going to lose money. You understand? There's no risk to that. There's no risk. Yeah, T, definitely. I'll talk to you tonight on there. Hopefully it don't come out too late before we're all sleeping. He likes to pull that once in a while. Hopefully it comes out a little bit earlier. But I'll breeze through it once and share some comments, and then I'll read it again just in case I missed anything. So yeah, guys, it's, again, the number one goal, right? We say it's corny, but it's the damn truth. Okay. The number one goal of a bear market is to survive and be around for this. Okay. When these guys give up, they're bored, they're blown up, they look for something else to get involved in because they can't make money. Okay. And they run away from the market for a decade. This is where you pick up all the money, not here. You understand? This is where you got to just survive, hang on to your money. Like you guys say, little wins, little losses, It's almost, honestly, I hate to say it because it demeans it, because you almost treat it like a DraftKings account, like you're betting the ball games. Okay. You're going to win some, you lose some, manage your money appropriately. You're not going to get buried. But this, when everybody's on the sidelines, that's where all the money's picked up. You understand? That's where you pick up all the money. Yeah. And listen, you hear the line over and over and over again, right? It gets corny, but it's the truth. It's managing your risk is the most important thing. Cardinal rule number one, nothing else matters. Nothing else matters. Okay. You could handicap and pick winners till you turn purple in the face. If you can't manage your bankroll and risk properly, you're going to blow yourself up. You're going to give it all back. And you're gonna either learn that one way or the other, the hard way or the easy way. I told you early on, and most of you it comes early because it's obvious, but that was my problem. That was my big hurdle initially in this game. I could make money with the best of them when the market was in a bull market. I had no problem making money. The problem is when this happened, all the money I made here, I gave it all back here. You understand? So all the money I made during this run, I would give it back in 2-3 months of this. So you don't need to be that intelligent to realize that this is not going to work, right? This is not going to work. I got to manage my risk a lot better than that for me to find any success. I can't make all that money during this and then lose it all in 2 months. So that's, but that's the game, right? Like we were talking about Drunken Miller. What does he say? I think his thing is position sizing and managing risk, right? He thinks those are the two most important. Before you even talk about any aspect of handicapping, the two most important things. So right now, you're in a time, it's an obvious time where you do not want to open up. You do not want to take big shots here and risk your capital. All right. This is not the time to do that. No, but that's the difference between people hanging around in this game, Praveen, and not being around longer term in this game. That's, like they treat every market the same, right? They play the same way they played this, they play this. And you're going to get hammered. Yep. Right? They buy every dip here. They do the same things they've been doing, right? They buy the same stocks here. Right? Amazon has to go up because it's Amazon. It's a good company. Right? But it just doesn't matter. Yeah, that's a lot of people. A lot of people. It's gonna happen. It's gonna happen to heal this bear market without a doubt. People are going to lose interest because they can't be conservative. And right, they shy away from the game, and then they miss the turn and they miss the bull run, and then they come back in late. Right, so that's that's totally normal. Most of us, we're all wired the same way, right? We're all wired the same way, emotionally, psychologically, right? We all feel the same things at certain times. That's what makes this so difficult. All right, we're all pooping our bloomers into the COVID lows. No one's feeling good about that. Yeah, this week I didn't either. This is a maniac. Today, I didn't even come close to playing anything today. I didn't even come close. Like, it was disgusting today. It was disgusting today. About how the Fed is creating IOU and adding them in their balance sheet because they had the losses. I heard about that. If that continues, they can technically go insolvent. But let me ask you a question. What do you mean insolvent? Like, how do they go insolvent, the Fed? Like, what happens when they go insolvent? Can they go insolvent? How do they go insolvent? They can't go insolvent. Right. Like, I was reading the same thing, about what's going on with that shit. But, I don't think it matters. I don't know it well enough, but yeah, they could print money because it's liability. Yeah. So you see, like like other governments, they can't print their own currency, right? Like even Europe, they got the euro and shit like that. It's a little different. The Fed, they're a powerful bunch, you know? They could do whatever their heart desires. And that includes apparently trading the market, right? That includes insider trading, supposedly. But yeah, I read, I forgot who it was. Somebody on Twitter had a write up about it. It was pretty interesting. A lot of that Fed stuff, I can't wrap my head around. I get dizzy reading about that stuff, you know, the maneuvers they pull. I'm not knowledgeable enough to, you know, honestly, I was talking to Charlie about that. The next time I do a flow course, I got to do it right. And I gotta have the time. I don't have the time right now. You know what I mean? I got to do it right and put everything I have into it. And so I'm definitely interested in doing it again, but I need to find the time. Right now it's just tough for me. Tough. You see, I have to cancel these webinars after the market, you know. If I want to be around from 8 in the morning to the bell, you know, I gotta have some time after market to do some shit. Right now, it's just I need a doctor. I need a good head doctor to heal if you got one. I need a good head doctor. Making a move to Florida. I've been moving to Florida. You know how long, Ed? You have no idea how long. No, at least for the past 20 years, I've been saying I've been moving to Florida. I mean, I came so close to buying a place in Boca. I think I told you this. In Boca, and then I got tied up with other shit. And I'm stuck here in this miserable weather in the winter. Miserable. But, you know, hopefully at some point I get down there. And no, and I got 9 dogs. You know what I mean? It doesn't make it any easier. I gotta get, like, the thought of moving too. You know what I mean? Like, maybe I make it a bigger deal than it is. The thought of moving with 9 dogs, I get anxiety, panic attacks over it. I appreciate it, so thank you. Yo, that's what I need, Bill. That's what I need. You know what I mean? Serenity. That's what I need. Yeah, I mean, Matt, but the 9 dogs, how do you get 9 dogs down there? I can't put them on a plane. Drive the 9 dogs down there? Who am I paying to do that? Oh, I got 1 dog up here now. The 9 dogs, they own the rest of the house, Praveen. If I had my 9 dogs here, it's a circus. I know. 0 taxes. I know. The total opposite here, where I'm getting hit over the head in taxes. Taxes and insurances. They robbed me blind. They found a sucker to stay here, and they robbed me blind. Yeah, Lucci. I remember talking to Lucci when he was, I'm like, Luch, just don't even think about it. The biggest mistake of my life. You make the move, you'll never regret it. You know? I remember talking to him when he was thinking about it. You know, don't even think about it. You're going to talk yourself out of it. Just do it. I made the biggest mistake. Oh, they eat me up. So, you don't even want to know. They eat me up in taxes. Eat me up. Destroy my life, taxes. Everything is taxes. Everything. You know, but I had the chance younger. Younger was the time to make the move younger. Now, I could have saved a lot more money. Don't get me started. You're going to make me suicidal with these conversations. I can't talk about this shit anymore. Yeah, I heard Trump NFT, huh? I heard Trump's jarring farts, too. I heard Trump's jarring his farts, I heard. He's selling jar farts, Mr. Trump. Crazy. Bitcoin shenanigans. All right, ladies and gents, I gotta run. All right. Tomorrow's gonna be a shit fest. I promise you, it's probably gonna be a messy, messy day tomorrow. But let's see, maybe we get a little weakness and things clean up the afternoon. We can play an intraday squeeze. I mean, that's the extent of it, but it's probably going to be really, really messy. The good thing is it's over tomorrow. You know, we'll have lighter volume, but we'll have cleaner flow, and maybe we'll find some opportunities. You know, it wasn't that bad prior to this week. Yeah, definitely. Let's get a little selling. Oh, because we needed some breathers out there, right? You know, I think Europe, Praveen, if you remember we saw some European bull flow off the lows, that rally. I just think a lot of these things, they got too hot and, you know, they could use a little breather. Like, look at the DAX. Remember, we were talking about this. Look at this. Right? Like, at best, it was going to hang around here. You know, now you got a little shake and bake. Yeah, I see the logic. You know, and then the calls too, the Fez calls were nice into the rally. So, but you know, this needed a breather, right? A lot of the good stuff looked like this. So we'll see. A lot of things to watch anyway over the next few days. A lot of stuff. Yep, China too, red hot. All right, so let's see what happens. Let's see. Next week or so, we're gonna probably see a lot of things shake out a certain way. So let's keep our eyes out. All right. I'll talk to you guys soon. Enjoy the rest of the day, night, and I'll see the majority of you mañana. Have a good night, everybody.